Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we looked at the MACD indicator, an indicator which helps us identify and gauge the strength of trends. In today's lesson we're going to look at three specific ways that traders use the MACD indicator to identify potential trading opportunities. So let's get started.
Okay, so because the MACD indicator is a trending indicator, you're going to want to shy away from using it when the market's in a range, even to try and predict new trends. So in addition to being able to tell whether the financial instrument that you're analyzing is in a trend just by simply looking at the chart, you can also get a better indication of whether it's in a trend or not and how strong that trend is by looking at the MACD indicator. And how you tell that is if the MACD indicator is close to zero, close to the zero line, then that's an indication of a range-bound market. Okay, so you can see here that the MACD is close to zero. And there you're in a range-bound market conditions, where over here towards the right-hand side of the chart you're trending up away from zero, and that's an indication of a pretty strong trend in the market there. So once you've determined that the market is in a range, there's a couple of different ways that you can trade the MACD, which we're going to look at first, something called the MACD divergence. And basically, very simply, this means when the indicator, the MACD indicator, is trading in the opposite direction of the market, that's a signal that the trend that's in place there may be due for a reversal. So you can see here that the market is making new highs here, but the MACD is actually trading down, and that's an indication that that trend is running out of steam. If it was a downtrend there that we were looking at and the MACD was trading up, that would be an indication that the downtrend was losing steam. But here we have our uptrend. And we can see here by looking at the MACD, that uptrend might be in danger, and you can see the market did sell off, although it did take a little while. So like all the other indicators that we're going to look at, you're going to want to use this in conjunction with some of the things that we've learned so far, to confirm your signals there. But you can see that divergence there, and it did call the market top there. It just took a little while. The second way is what's known as the MACD crossover, and very simply, when the MACD line crosses above the signal line, this is a bullish sign, and some traders will trade this as a buy signal. And when it crosses below the signal line, then that is a sell signal, and traders will look to go short or exit their long positions on that cross. And again, this can be traded by itself, although not recommended. It's recommended to trade that if you're going to trade it in line or in conjunction with some other indicators and some other of the things that we've learned so far, but it can also be used as additional confirmation for other things that you may be trading. So you can see here great buy signal, caught the very bottom of the trend there, and then great exit there. It caught the very top and got you out there. So a good indicator, but one that is going to, because it generates lots of signals, it's also going to generate a lot of bad signals in addition to the good ones. So you want to have some confirmation there. Okay, so you can see the market went up there as a result of that. All right, that's our lesson for today. Since there's a lot of different ways that you can trade the MACD, and a lot of people have a lot of different opinions on some of the inputs for the indicator and exactly when to use it and what markets to use it in and those types of things, I'm creating a page on InformedTrades.com with resources for the MACD. So if you want to learn further about that, you can find that link just below this video if you're watching this video on InformedTrades.com, or if you're watching it on YouTube or one of the other video sites, you can find that link in the description section of that site. So that's our lesson for today. You should now have a good understanding of the three main ways that traders look to trade the MACD indicator. In tomorrow's lesson, we're going to look at oscillators and start going into some of the other ways that traders can determine strength in the market. So we hope to see you in that lesson. As always, if you have any questions or comments, we encourage you to leave those in the comment section below, and have a great day.